talking about how to derive point of interest entries, and I'm going to be sending a follow-up video to also guide you in understanding how to derive a point of interest. So I don't know if you saw this analysis here on gold. I outlined this analysis. I think this was on Wednesday or so. I can't remember. Well, it was last week. So I would recommend you go through this analysis, and I'm going to use that as the point of reference for this video. So now if we go to the monthly time frame, you can see on the monthly time frame we'll have this fair value gap here. Let me remove everything on my charts. You can see we have a fair value gap. Now after mitigating this fair value gap, what time frame break of structure would you like to see for you to now be bullish and anticipate for a run on buy side liquidity? The time frame break of structure you would like to see is 4-hour time frame. So if at any point, whether it's at the beginning, midpoint, or close of this fair value gap, you see a 4-hour break of structure, focus only on buys. Don't even try to scalp any sell. Only buy. Now, as you can see, we've mitigated that position. You scale down to weekly to see if there's any other confluences, anything you can work with. And one thing that is evident here is we have our swing low, our swing high, and if we run the Fibonacci from that swing low to the swing high, you can see here, right here is our midpoint equilibrium. Anything below equilibrium is discount. So if we see price below this equilibrium and we see a break of structure on the 1-hour time frame, we'll be looking for buys, and only focus on buys to continue higher to run all-time highs. Because overall, if we use our quantitative analysis from this low to this high, 21% is the overall move. So the next move from once we find low, let's say this is our new low, we'll find a low from here. Worst case scenario, price will deliver a 10.5%, and 10.5% is all-time high, new all-time high. So worst case scenario, once we find a low, worst case scenario will break the previous high. Now, that being said, you scale down to daily time frame. And on the daily time frame, you can see on the daily time frame, this is the midpoint. You can see that we've tapped that midpoint. So let's zoom in to see. You can see that we tapped it and we went below it. So if we see a break of structure from here after mitigating this equilibrium, we'll focus only on buys to continue higher. Even if we're scalping to continue higher. There'll be no anticipation for sells. Now we scale down. Now before we scale down to 4-hour time frame, on the daily time frame, you can see that we have a fair value gap here. So if we see a 30 minutes break of structure here on the intraday level, we'll be looking for buys. Scale down to 4-hour time frame. On the 4-hour time frame, we have a fair value gap there as well, resting below equilibrium, from above equilibrium to below equilibrium, and price mitigated it. So 15 minutes break of structure, we'll be looking for a buy. So can you see how I'm scaling down this from 4-hour break of structure to 1 hour to 30 minutes to 15 minutes by going down to the time frames? Now, overall, if we see a 4-hour break of structure overall, we would not focus on any sells anymore, because any move to the downside, even if it comes deep, we'll still look for buy, because that's already solidifies the intraday break of structure. That is why this 4-hour is essential. So even if we miss a buy, trying to buy from the smaller time frame, like 15 minutes time frame, even if we miss a buy, we're not going to be bothered about that, because we've not still broken the 4-hour structure to confirm that the intraday level, we're now bullish, and all our anticipation is to continue to the upside. For example, you can see right here, even though we were trending up, creating high, low, high, we eventually broke this structure. The moment we broke this structure, that was when structure shifted, and look what happened afterwards. This is the break of structure on the 4-hour time frame. Look how price came back, mitigated that position, after that dropped, because this right here was a break. This was the violation of the uptrend on the intraday level. So we're now going downtrend. So right here was opportunity for sales to take it to the downside. So that being said, the next thing we do is we're anticipating to see this break of structure on 4-hour for that to confirm our bullishness. And after that break, we want to see a retest, just exactly how you saw this retest continuation. This was a key level you look for points of interest to sell from. So now, as you can see, we haven't broken that yet, but if we wanted to buy, scalp in the market, what we'll be using is the 30 minutes, 15 minutes time frame. And back to the original title of this video, how to derive a point of interest. You can see how I've derived the point of interest from monthly fair value gap, derive a point of interest weekly fair value gap, derive a point of interest daily fair value gap, daily discount below equilibrium, 4-hour fair value gap on 4-hour. So this is basically how you just derive the point of interest you want to work with. You scale down time frame to time frame, time frame to time frame. Now, as you can see, we've mitigated it. So the moment we see this mitigation, now we're focusing on 15 minutes time frame break of structure. As you can see, we created a high and low break of structure. Right here, break of structure. And after this break of structure, you can see price came back for a retest, mitigated the last down close candles. And if we go to 2-hour time frame, that's where you'll see the fair value gap right there. You can see a fair value gap right there. Price came back into. So one thing in trading is you're gonna have to turn to a detective. So you have to go through time frames: 1 hour, 2 hour, 3 hour, 4 hour, 5 hour, 6 hour. You literally go through every single time frame to make sure you see that fair value gap, because if you miss it, price will literally come and just leave you and go. So overall, we're still not out of, we're still overall intraday level, we're still bearish until we break above this significant 4-hour high. So anything can still happen and price will still wipe these lows. Now, I'm not saying that's going to happen. Overall, I'm bullish on gold. Now, the only thing is we could play around. Price could literally play around in here. Anything can happen. It could play around in here, play around before eventually breaking this structure, retest, and continuation. So don't be surprised to see things like this. It's very normal. The only thing you do with it is you can, if you're a scalper, you can scalp it, focusing on the overall trend, which is bullish. So if price is coming down, you can look for scalp buys, get out at any fair value gap you see on the 5 minutes, 2 minutes, 3 minutes, just get out until we see this break. It's only when we see this 4-hour break, all our focus will be only on buys. We don't even look for a scalp sell, because any scalp sell, there's a high chance you get taken out and take a loss, because after breaking here, don't be surprised to see an expansion that will literally blast through everything, because everything I'm seeing here is low resistance liquidity. So price can easily smash through those key levels. So this is very simple way you derive point of interest, and you scale down time frame to time frame, time frame to time frame. If you have any questions based on this, you let me know. Another thing I wanted to point out is once we see this break of structure on 4-hour time frame, once we see that, so let me show you something. So let's say, for example, we create a low, we'll break this structure, creating a new high. What you now do is, this is what price will do. Price will come back into, what you now do is you work with the range low, range high, look for the discount zone, look for fair value gap resting below equilibrium. That is your key level. Scale down to 1-hour time frame to see if there's a fair value gap there. If there's a fair value gap there, you wait. If price comes in there, look for a 5 minutes break of structure and buy. Then after that, price will still give you another structure like that, still measure the low, the high. You'll still see price come back into below equilibrium, still look for 5 minutes break of structure and buy again until we get to this overall all-time high. I'll send you a video to follow up this, what I just said right now. And the reason I want you to be prepared for that is in case if we break the structure, so you know what to do for entries, first entry, second entry, third entry. You can literally get so many entries, it's endless until we break this high.